this Moody's downgrade of 15 banks overall, 5 of the 6 largest U.S. banks. What does it mean for the economy and for consumers?
Well, it's bad news for the economy, Terry. It reflects continuing fears that that Europe's financial crisis is not over, that the banking system is still fragile. What it means is that it will cost more money for these big banks. As you said, 15 banks around the world, 5 of the 6 largest U.S. banks, cost them more money to borrow. What that means for the economy as a whole and consumers in general is this. Our problem for many months now has been that there's plenty of money in the system. The Fed has been putting money into the system, but banks are reluctant to lend, even at low interest rates, to good customers. They've been raising the threshold you need to reach to be able to qualify, and that has slowed down economic growth, and this does not help that.
Mm-hmm. Gene Cummings, the Fed has been spreading less than good news around, altering its outlook on the economy and suggesting that the economic growth, its prediction anyway, might go down from to 1.9 to 2.4%. How much of that has, how much of a change is that, and how significant?
Well, it is. All of these indicators are significant in terms of the confidence that they are not showing in the growth. They dropped their growth projections by about a point. They at one point thought that unemployment might dip slightly below 8. They say now that won't happen. So it is a reflection of a consensus that we're growing, but we're growing really at a snail's pace. And the problems in Europe are definitely taking a toll on the United States at the moment. It's not dramatic, but it does affect the ability of businesses in the United States to export and to grow and to make money. So it's a reflection of the fact that the recovery that people thought in the spring was starting to really begin to get some traction has stalled at the moment.
Ari Shapiro, the Fed also announced it would continue so-called Operation Twist through the end of the year. I would argue that's one of the worst names I've ever heard, but remind us what it is.
Well, it's actually named after the chubby checker hit from the 1960s, which is when the Fed first came up with this idea. One of the most reliable tools the Fed has in its arsenal to boost the economy is lowering interest rates. And over the last few years, they have lowered interest rates so much that they effectively can't really lower them any further. So Operation Twist is kind of a bit of economic jujitsu to try to get the same impact by doing different, moving the numbers around a little bit. But the point of it is that, as Doyle and Gene just said, this is yet another sign that there's not a lot of confidence in the economy right now. Somebody recently told me that it's like a plane that's just getting off the ground. If you run into turbulence, it's going to have more of an impact than a plane that is soaring at many thousands of feet. This economy, we're not going down into the ground, but we're in a fragile state. And so the kinds of impacts we could get from Europe or even from the financial cliff at the end of the year could really hurt the economy in a way that would undo what recovery we have seen over the last few years.